everyone, welcome to the show. And I am joined by Julian Wheeler, who is with me from Charlotte Capital. We were just talking about double diamonds.
Yes, that's very American of you. We just call them black. So
well, there are double diamonds springing up in Andorra.
Oh, okay.
Yes.
Stand corrected.
In a principality. I know they don't have it in France and also most of Europe, but it is starting to appear.
Good.
Speaking of appearing,
yes,
Funko Pop has
Funko
popped.
Pop has appeared.
Finally.
Well, finally, you're impatient. You're like another retail investor.
Oh, I've been looking at this for
good
a
old
long
Funko.
time.
So anybody who heard me talk about this when September, October, something like that. Anyway, it's finally, so what happened? Funko, what happened was a hedge fund called Pleasant Lake announced the day of that big spike up that they have bought just under 10% of the company. And they wish to push the management into a sale of the company and, quote, they would get involved. Well, that's kind of decent of them, isn't it? You know, so what they're really saying is that they'd quite like to take this private. So anyway, so for me, Funko is now in play. Quick reminder, Funko Pops are these big-headed dolls
with big eyes.
Big eyes and black eyes.
They don't have any whites to the eyes.
No whites to the eyes.
And they make these toys based on lots of very, very popular series, like, you know, Harry Potter, Stranger Things.
They'll do whatever's popular, they do.
K-pop Demon Hunters, which I've learned from you.
That's it.
Clearly, I was living under a rock.
Well, before you knew that. So very quickly, it does about $1 billion in revenue. As when I found this thing at $3, it had crashed because of the tariff implications and sales last year. They fell off a cliff. There you go. And they had a lot of debt. What has happened since I've last spoken about this on the show is they renegotiated the debt. Big tick. So instead of expiring in September this year, it's moved out to December 27. Then that was the first move. Took it from about 3 to 360. That you see that little green bar on the left there under the U. That's it, that one. And then 2 weeks later, bang, we've got a 10%. So I think the thing's in play. The real problem is we fear, and this has happened before, is these shareholders, and it's a very concentrated shareholder list, they all get together and they take it private. But here's the thing. The CEO has got options that vest at different levels, all the way up to $8. He gets paid a full amount on change of control. So I sincerely hope the CEO, he's acting for all shareholders and not just a few. So we shall see.
Many people who have been on this journey with us, you know, some of you, I'm looking at you, have said, oh, you know, after months of Funko pain finally pay off here recently, showing you this little green here. And some have got out to take advantage of that 13.5%. I believe it was more intraday, but that was the upon the close pop there. Some are still in it. What do you say to those who are still?
Well, I'm still in it. I'm still in it. The company
at 4.5, at 450. What will we do?
I think yes. I think it'll pull back. It pulls back where you've got that dotted line there. What's that? Roughly 4.5.
436.
436. So somewhere like that. If it pulls back there, and the market's very skittish at the moment, very volatile, so should easily get a little pullback. Yeah, I'd stick with it. I think the stock's in play. You've got a new shareholder. They're not going bust, or at least there's no way they should now. They've got the debt extended. The tariff situation, Trump's new tariff, that's a plus for them. 15% global is far better than what they were facing in Vietnam and China. So they're actually net winner of the change in the tariff regime. The stock's cheap and the CEO, show me the money, gets paid on a change of control. It's going to happen. I think it's going to happen. So anyway, I think it goes to $8. If it gets up to 8, they'll probably issue stock. So they might issue stock, but now it's in play. Who knows? Anyway, it's going higher.
Okay, so that's one of your investment plays. Another one is MongoDB.
Right, well, MongoDB, I know people have asked about MongoDB, and I've talked about MongoDB. The last couple of quarters' earnings were spectacular, and the stock has run. The problem with MongoDB, Ange, is it's a hotel on Old Kent Road.
Oh, dear.
Now, do you know what that means?
I'm going to guess monopoly.
Monopoly is correct. There's an old expression which owning a good house on a bad street.
I'm more Bond Street kind of guy.
You're Bond Street. Bond Street would be a great street, and there's more rent on Bond Street in the game. If you own a hotel on Old Kent Road, it's great when people land on it, but you're still on a bad street. So the total, anyway, you know what I'm getting at. It's one of the best software stocks because I just have to explain about MongoDB. MongoDB is a vector database. Now, what a vector database means it pulls together all sorts of data from all sorts of walks of life, whether it be video, data, streaming, voice, text, you name it. And it can put them all in a place where you can use it. Now, if this AI agentic world is going to surface, you are going to have to do this. Now, currently, anything in software is being slashed and burned because they're saying, oh, we can replicate that. And now it's got to the point, it's a bit like Traitors. Do you watch Traitors?
I love Traitors.
I love Traitors. So what happens? Everybody's sitting around the table and somebody says, oh, I think you're a traitor. And everyone just piles on. And the poor person says, yeah, but I'm not. You can't defend yourself. Mongo is sitting there saying, look, I'm a faithful. You won't see. You get rid of me, I'm a faithful. I'm a good guy. But it's being shot like traitors. The traitors, by the way, are the ones that one needed to be short. Accenture, IBM, Oracle, Microsoft, all of these guys, because they have a business which is highly people intensive and is going down. But MongoDB, they report next Monday. I think they will be good. What the market does with it, I will have to tell you, I get a better clue after tomorrow. Tomorrow, Salesforce and Snowflake both report. They are both big software companies. Whatever they say will matter, but more importantly, whatever the market does. If the market's okay with it, Mongo will be okay.
However, looking at the chart from a technicals point of view, it is.
We've just broken down.
Yes.
Now, but look where we are. We are now an oversold there. That's the only good bit, your middle chart there. That's your RSI, right?
But if it continues to head in the direction that it does, then it will try and close that gap.
We will try and close the gap, but I don't think it's going to do that. Hopefully, we've got a week to hold out. Well, 4 days. It reports next Monday. The selling, as you can see, that RSI is down into the oversold bit down the bottom. And tomorrow night, we will know more. If you have it paired up against weaker software, that would be the way to go, in my view.
So that is another one of Julian's shorter term investment views. Now let's talk about the worst house on Bond Street. That's more Angie's kind of style. I want the worst house on the nicest street. Never mind, it doesn't have a roof. Never mind, it needs walls that all need replastering and a cellar dug up, whatever, right?
Okay.
But I want to look at some stars that perhaps give me a longer term return. Okay,
so I'm going to give you, we've got two. We'll go with the big one. Since we're talking about Bond Street, we're talking about shopping. Let's go with Shopify.
Right. You see, the thing is, you know this, Julian. I don't like retail. I don't normally...
It's not retail.
I know it's not retail, but would I have used Shopify before?
Yes, without even knowing it.
Oh, dear.
Because Shopify handles 40% of US e-commerce. If you're not on Amazon, if you're not going to Amazon, you're almost certainly going to Shopify. You don't know this because you're going to somebody else's site.
Right. So it's in the background.
They're in the background. So they are infrastructure. They are not software. Now, as you can see, why I'm liking this is because the stock has come down. It's never been a cheap stock. It's a lot cheaper than it was, and it's now had a 30% correction. The numbers came out. The revenue was 31%. 31% growth. That is good. Not many are going to do that. But here's the thing. Shopify is not just a piece of software. It's the entire infrastructure for the long tail of merchants who are not on Amazon. They provide the payment system, the tax, the inventory management, everything. Everything you need. It's not just a website. It's not just a website developer. That's easy to do. Anybody can do that. So what you have here is if it's as a result of running 40% of US e-commerce, who has more data points than them? No one. Absolutely no one when it comes to shopping knows more where the clicks are going, where the intent, AI shopping. And basically, this is what's going to drive AI. Shopify is a winner from this. Now, right now, it's on sale because I don't think the market really understands it. So they've just put it in the software basket. It's software. Good night. They missed on the earnings per share. Well, because they're investing. So what they had, though, is they have something called the product network. And this is an opt-in. And so basically, it will share leads. If you're a merchant, you can share a lead and get paid. They're working out a commission. So imagine if I haven't got something, but you come to me, I can ping it on to you, another Shopify merchant, and we share something on that.
Nice.
And
so
they
you
will
scratch my
organize
back.
Correct. They will organize that. So this is the anti-Amazon. If you're anything but Amazon, you're on
This
Shopify.
would be it.
And of course, Shopify runs on Cloudflare, which is another stock I like, but it's expensive, but it's infrastructure, not software. At some point, people are going to work this out. Right now, the stock's down 30%.
Yep.
So now not a bad time to be in.
Interestingly enough, it's also making its way halfway through my EMAs there. It's crossed the 200 and also crossed the 100, keeping its nose just above there.
Yeah.
However, what's also equally as interesting, which kind of mirrors what you're talking about, is just checking in on TradingView. On the daily, it's still looking like it's a phase 2 down phase at the moment, but
It's still in that, what I said, it's still on the bad.
exactly.
It's a bad house at the moment, but it is in the right place. It is absolutely in the right place of what AI should be. When you have this amount, I saw the chairman at CEO was over in London at Christmas. There was a NASDAQ conference, and he said, Amazon and Shopify, when you have a disruptive technology change, the big benefit, you can't do this yourself. You can't. But as a small merchant, you do it with Shopify. And that's how it should work.
And here's the interesting thing, because once we look at the 1 month view, and this is on TradingView, you'll see that it's trending up on a phase 2. So maybe looking at a good entry point here, and perhaps that entry point might come if we see some hostilities, which might cause some stocks. I've got a very big watch list. I'm 70% cash at the moment, so I'm waiting to shop.
Ready to shop.
I'm waiting to shop.
Well, you've got
not on the
Funko,
high
you've
street.
got Shopify, you've got all sorts of things. Okay, so, funnily enough, if we have hostilities, and I'm going to bet we do, okay, I'm in the it is going to happen camp, just because based on history. The US has never deployed this much hardware to a theatre of war, whatever you want to call it, and not used it. I mean, it would be so un-Trump to say, oh, do you know what, we just come home again. Guys, just come back. No. U-turn. He's going to do this. He is definitely going to
The question is when.
Well, that I don't know, and obviously they'll try and do when people aren't ready. But the fact is that there's so much information with satellite imagery, tracking. Everybody knows. Everybody can see it.
The fighters.
So I have a colleague at work who I refer to as Major Tom. He told me 2 days before Putin invaded Ukraine. He said, it's happening. He could see it. He told me. So we positioned accordingly. I should get about a 24 to 48 hour warning.
Was Major Tom, like me, a big fan of satellite images of tracks?
He's got all this stuff. He even watches the Domino Pizza thing. There's an indicator of the Washington pizza nearest the White House. If you see spikes in the orders of evening pizzas, working around the
Well, I am watching the mattress indicator. Tell Major Tom I'm looking at the mattress indicator.
What is the mattress indicator?
So there are images. I am still waiting for 2 sources. All habits die hard, so I like 2 sources and everything. But I am getting more and more pictures of mattresses being pulled into places like K12, N12, which is the main broadcaster out of Israel. So there's also mattress watch going on.
Look, this isn't great, but obviously the market has already played a little bit of this, pushing the oil stocks higher, pushing the oil price higher. I think if we do have an attack, a strike, whatever we want to call it, that will be your spike in gold and particularly silver that you should sell, which is another.
That's your selling opportunity.
I think it's a selling opportunity. I've written my latest piece. You go on the Shard website or my LinkedIn page. I wrote saying a silver bullet for investors. I think silver is a sell, a big sell. But you're having one more chance to sell it. We're going rallying up because of this Iran situation.
How long do you think you are going to have this position on for? I mean, how long a short?
Silver, I think silver comes back where it came from, as in it goes back to 30 or 40. Because you have to understand that silver is there we go, a silver bullet for investors. There we go. Thank you very much. Over the pond. Fundamentally, 56% of silver is used in industrial processes. It used to be for camera, film photography, and that was replaced almost one for one by solar modules. The price of silver, as a result, for 25 years, stayed where it was because you took one usage and replaced it with another. Fine. Now suddenly it's gone up. Why? Well, because it's like gold or it's a dollar debasement trade or whatever. It's just a bunch of speculators buying it, okay? Because there's no more use of silver. And here's the big problem. The price of silver, it used to be 3% of a solar module. It's currently 30. It's completely unsustainable. So either we're going to have a demand collapse in solar, which won't happen. But 2 Chinese companies have come up with a new technique, and one of them's now into mass production of using it without silver.
Oh, interesting.
They've substituted out the silver. Well, that's your biggest usage right there. So there's absolutely no fundamental reason to hold the silver price at this price because it gets substituted away. It's a commodity. I'm sorry. So unless you think the dollar is going to halve, central banks don't buy it. They buy gold. They don't buy silver. There's a massive speculative position in this silver. We saw what happened a few weeks ago. Got crushed. That's the first leg.
That
now
January eruption.
There you go. You have a look at your chart. That was the beginning. That's the warning. That's your kill. And now you sell rallies.
So I no longer hold silver.
I agree.
And I sold before that January crush because I wanted to pay myself and pay for a ski trip.
Pay for a ski trip.
Yes.
There we go. So look, looking at your line, it's just bounced exactly where we should be selling it again.
Yeah. And so my question is, I love all things metals. What is this substitute?
Copper. Copper. Much happier to own copper. So this company, it's called Shanghai Aiko. It's listed Shanghai Aiko, AIKO. They have produced, are mass manufacturing a solar module without silver. And they've replaced it with copper electroplating.
Interesting.
So all of that silver demand will shift to copper at this price.
Nice.
Unless the silver price comes back down again.
As someone that owns Kefi, which produces copper and gold, and Atalaya as well, that's music to my ears.
Okay.
That is not trading advice, people.
So copper over silver. Okay.
Aurora.
Aurora. Okay. Right. Aurora.
Driverless trucks.
Okay, let's have a new one. Well, if, of course, everybody looked at my piece, my stocks for the year, this is one of them. Aurora Innovations. This is self-driving that actually counts. This is what matters. And are you going to go in a robotaxi, are you?
I have been in a robotaxi.
Why?
In fact, it's going to save my life. It is going to save my life.
Because?
Because I have really, really bad eyesight. If not for technology, I would have stumbled into a hole and killed myself. And so with my eyesight, it's not going to get better.
Oh, sorry, you're talking about self-driving your own car.
Everything.
Oh,
in fact, you're talking to someone that last weekend went to Polestar garage to watch them. I eyed them because I wanted to know, because I also hold NVIDIA long on pension, although I've halved that now because of wanting to diversify. I watched them place a new chip, an NVIDIA chip. They upgraded the chip to my car. So as someone that doesn't necessarily, I love humans, don't get me wrong, people, I love humans. I do think I need these robotaxis, robocars, robotrucks to exist.
Okay, then they will exist. But I'm suggesting that everyone's going to have a go in a robotaxi because it's a novelty factor. Right? The reverse novelty factor I had 25 years ago when I went to Boston, Ritz-Carlton. I went in the lift, which was operated by a man. As in, he let the handle out and we shot up and then he closed it and we stopped. A man-operated lift. That was a novelty. It was great. I don't know if they still have it, but they did have. It was great. We all talked about it. Everyone's going to have a go in one of these robo-taxis because it's new, because it's like going on the London Eye.
Yes.
You do it once. Why'd you choose a taxi? I'll have the one that's quickest, easiest, and cheapest. If I was a black cab guy, he's called Sean something, I think he runs the black cabs, I'd say, guys, we have a choice here. We either go out of business, we drop the price 25%, which is what Uber said was the cost of the driver. That'll be the basic. If you just get him driven, 25% less. You chop these boys off at the knees. They're more expensive. Are you really going to pay more just because there's no driver? Makes no sense. You should pay less with no driver, obviously, but they're more expensive because at the moment it's going to be too expensive. So if the black cabs and the Uber drivers all cut their prices, you just knock them off. So that's one thing. But two, otherwise, what drivers will have to do is be like chauffeurs. He'll get out the car. He'll carry your shopping in.
Oh, you'd love
He will offer a service.
Yes.
If you're going to be a person now, you better offer a service. And merely driving from A to B is not a service because it can be done without a driver.
Now in time, it will get cheaper.
Okay, now let's move to Aurora. Sorry, that was a real roundabout way. What is Aurora? Aurora is a self-driving truck. I'm talking about a Class 8 truck. I'm talking about something that hauls 2 tons of kit. Now that is an entirely different matter. Because that, remember I told about Old Dominion? We talked about Old Dominion?
Yes.
One of the reasons Old Dominion is making money, we have a driver shortage. Well, if you've got a driver shortage of trucks, then offering a driverless truck clearly has a market right there. But here's the other thing. Aurora has one contract at the moment with a fracking sand, which it takes up and down on the public roads across Texas in the Permian Basin, taking the sand to the oil wells. And it goes backwards and forwards through the night. So it doesn't have to stop to sleep.
Doesn't get sick.
Doesn't get sick. Doesn't, and it's 100% safe. Nothing's happened. They're approved. They're approved in fog, rain, wind, snow. This thing works.
So I have a theory, and I'd like you to poke holes in my theory, because I always ask our clients and also our community to, every time I have a new theory, I like to know if I'm wrong, if there's something I've missed.
Yeah.
So with Aurora and Old Dominion, I feel like I want to be in it because there is also an opportunity for a hedge here. Because if for some reason we do have these strikes and economies go into turmoil and we have a slowdown, you buy less stuff, I buy less stuff, right? Surely this can only be good for these stocks, because you'll have companies like your big Walmarts and things going, oh, we don't want to ship too much stuff, so we're going to have to share containers.
Okay, that's Old Dominions.
Old Dominions, and we're probably going to. I would like to think it's cheaper than hiring people by that point.
Oh, sure, but the reason Aurora works is because what they do is they're providing something. This is not like, as I said, a robotaxi, which is just taking you from A to B in London. Who cares? If it's got a driver or hasn't, it's going to be about cost, in my view, once the novelty wears off. This is a case of we don't have the drivers. There are safety regulations. There are time restrictions on drivers. This thing is solving a problem. It's solving lack of drivers, and it's solving a safety issue because the guy can fall asleep, so he's not allowed to drive the hours. So this is a cost reduction. Aurora have one contract with this. They're currently trialing with FedEx. There's currently a cab-assisted man in the car, but as of Q2, he comes out. That is quite something. This thing is approved. Tesla, remember, he's not approved anywhere.
No.
Okay, I'm not a fan of Tesla. I think I've alluded to that many times. Whether the stocks are short is another matter, but it's certainly not a buy. But Aurora, so it's a $6 billion company. AUR. There it is. It's been raising. The reason the stock's been weak for the last few months is they were raising money. They did that slightly underhand, in my view. They did it quietly, just jobbing them out to the market. But they now have $1.5 billion of cash. So they have $1.5 billion of cash, which will see them through. They are now going to produce 20 trucks a week, coming off the production line with Volvo, their partners in this. And that'll give them, by the end of next year, they'll have a fleet of 1,000 trucks. That means some proper revenue. At the moment, it's got a tiny bit of revenue. They're in, as I say, pilots with FedEx, and they are working on public roads with the oil industry. This stock is the way to play selfless driving.
Well, I see you in one of the Waymos and the driverless Ubers when they roll out middle of this year.
Oh, yes, I'll have a go for fun, like I went on the London Eye once. Do I go on the London Eye every week? No, done it. I will get in a driverless taxi if it's cheaper and faster and more convenient than the one with the driver.
I'd like to think you're right about it being a novelty, but I am flying to Shanghai in October, where I've been told by my cohorts there that you'll be surprised how much it is embraced and how people go in, they go, Waymo, put on the massage, Waymo, I want some fresh air. Wind down the window. Wait a minute, order me my favorite bubble tea and stop at this place because I'm going to pick it up.
Is it more or less expensive than the driver?
Well, it's cost effective, so it's equivalent, is what I'm told.
As I said, the driver's going to have to fight back by offering a service.
And this is the problem. I don't think the drivers and that part of the industry are willing to come together.
Then they're out of business.
Yeah, and take
as simple
a
as
cut.
that. I mean, look, it is a competitive industry. What driverless cabs should do is drop the price. I mean, cabs are expensive. How did Uber break into London? Because it undercut the black cabs by about 75% initially. Now, of course, they've crept up. Creepy, sneaky Uber is actually very expensive.
It is.
Ridiculously expensive.
Yes.
So now, when I can, I'll take a black cab.
I prefer black cab too.
Well, there we go. Yeah. We all prefer it, but it was much more expensive. So you might like your driverless, but if you're going to pay a 50% premium, people won't do it.
Speaking of premium, we always deliver premium in the space at IG for you. Yeah. Oh, and so we have loads of questions from our clients. And so we're going to run them through with Julian very quickly. Rocket Labs, Julian, view?
Rocket Labs. Okay, Rocket Labs is one of the space companies. There are only about 2 or 3 ways to place space. And that's one of them. And, there's the Seraphim Trust in the UK, which is now fully valued, in my opinion. It's now trading up at NAV.
Which camp are you in? Are you in the camp A, where it's like this has longer to run because you've got SpaceX and everything coming up? Or are you in camp B, where, SpaceX and that potential IPO is going to be kind of like top of the market?
B.
Yeah.
B. I think space is, we're well ahead of ourselves on this. Well ahead of ourselves in terms of the valuations. SpaceX, I think, marks the top of the market. It'll happen in June when the stars are aligned, says Muskie. And I reckon, just like Coinbase, we might get OpenAI as well. If we get the two of them together, that absolutely will nail the top on this market for now, because you'll have had all the Trump tariff things, etc., etc. So B, I'll be a seller into that. Don't like space.
Another one on rocket companies.
So Rocket, the mortgage company, which I've talked about before, they are set up to be right. They're currently they're going through a little pullback because it's a case of, can they be replicated? I don't think so. I think they will use the AI tools to what they have. They still have mortgages, estate agents, and servicing all in one bundle. I don't think that is as easily replicable as people think. So I still like that.
And finally, a look at the merger of Transocean and Valaris.
Oh, very good. Yeah, that's a really, really smart move. Transocean had been in the wilderness for a while. Valaris was very much the premier offshore. And offshore is where it's at. You can contrast the fortunes of onshore Total in Mozambique, who've had an absolute nightmare because people get murdered, and offshore Eni, who are operating 50 miles offshore. Where's the safest place? How can you be secure operating? You operate offshore. So I think floating LNG, offshore drilling, offshore is the way to go. It's the only way to be safe. It's the only way to operate in hostile environments. So anything offshore, I think, in the oil industry is good long term. Stocks have run a lot. Okay, they've had a run, but a very good long term hold.
Nice, thank you very much. We got through a huge amount there, and we look forward to welcoming you back, Julian. Always a pleasure.
Thank you, Anne. Thank you.
Any questions, please put them down here. Don't forget to hit the like and subscribe button. We'll get all your questions asked, and by hitting the like and subscribe button, it means that Julian and I can bring you more of this fantastic content. Thank you so much for joining us.
Thank you very much.
Happy hunting, all of you.